Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 26th day of October, 2020, and this is the Daily Report for Gold and Silver. We absolutely have some uncertainty in terms of the election, but today's sell-off in U.S. equities was definitely driven by the pandemic and the numbers spiking. We'll talk about that. We'll talk about the relationship between gold and the dollar, but first to the price board. As far as I am concerned, gold held up very, very nicely in light of a U.S. equities markets that sold off dramatically and dollar strength. This is December futures, currently down 70 cents at 1904.50. And when we look at silver, that did have a decline of about 1.25%, 24.37, down 30 cents on the day. And as I said, it was dollar strength that really accounted for a lot of the move in gold. In fact, when we look at spot gold, that traded modestly or fractionally higher, even with the dollar at 93.04.5, which is about a 0.3% gain, because spot gold is trading up right now by about 50 cents, but most importantly above 1900 at 1901.70. In terms of the ETFs that we follow, SLV and GLD, SLV definitely had a decline, 1.44%, and is currently at 22.61. And GLD had a slight decline, and that is currently fixed at 178.55. The first chart that we are looking at contains gold futures on the top and the Dow Jones Industrial Average on the bottom. We can certainly see today's activity was a defined downtick. In fact, we saw the Dow down well over 700 points, closing 650 points lower. The chart that we have put up on the screen does have gold futures on the top. However, we have the dollar index on the bottom. We can definitely see strength coming in after a decline over the last week. At the same time, we can see a modestly higher spike and basically unchanged pricing, with spot gold currently up only about 60 cents on the day. But nonetheless, what this chart does demonstrate is that there is a flight to safe haven assets, and the dollar is definitely one of those vehicles. Traders, we are looking at a daily gold candlestick chart. We have a long trend line that begins at the lows mid-March when gold was trading at roughly $1,450, and that is then attached to these series of lows here. When we blow up this chart, it is easy to see that we're trading just under the channel right now. We've had lows under the channel for the last 3 trading days. The question is this signaling lower pricing or simply consolidation of price? My estimate right now is we're looking at a market that is simply consolidating. We have no active trades in gold futures or silver futures, but we do have an active trade in GLD. So the fact that it's consolidating as we go into the election, and the fact that the pandemic is worsening not only in the United States but in many countries worldwide, I would expect stability, but we have to factor in the fact that it has been led by dollar strength or weakness. In this particular case, it is dollar strength. A long-term view of the dollar shows the top that was hit, this at the end or middle of March, reaching 103 in terms of value. And aside from a couple of dips in the market, we can say that throughout the rest of the season, in fact, up until September, we saw the dollar declining after reaching a low of 91.76 at the beginning of September. From September, we saw it climb back to approximately 94.50 and then move back into a decline. The question is, we've had a couple of days in which have traded higher. We've definitely hit the slow here. Is the dollar going to continue to strengthen maybe to 94, which would be the next level of resistance we have? Support in the dollar is currently at those lows at 91.58. The dollar strength obviously impedes gold and silver pricing from moving higher, or limits the move when it does move higher. So this is something we have to watch carefully. The last chart I do want to look at on today's show is silver. We have a long-term Fibonacci retracement, which goes back to the lows in March, up to the highs achieved when silver traded just shy of $30 per ounce. Within that, we've identified a channel much in the same way we've identified a channel in gold. In terms of silver, we have drawn our channel lines from a series of lows that come in, and the two lows that we're picking is this low here when silver was trading at roughly 21 and change, up to this low here as silver traded at around 23.75. So today's action is slightly below that channel line, which does have similarities in terms of chart patterns to gold. We can see, though, that the body closed right at the lows of this channel, so I remain bullish on silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.